Welcome to Money Matters TV. My name is James Chan with Asia Marketing and Management. I set up my business some 40 years ago, helping companies do business in China. We have a great show today. We have two topics which will be very interesting to viewers in general. They will be about mortgage and they also will be about entrepreneurship and entrepreneurial financing. Before I go on, I should introduce my co-host, Ken Jordan. Ken Jordan of Freedom Mortgage Corporation. Hi, Ken.
Hi, James. Thank you very much. It's good to see you again.
Good to see you. You are a veteran of this show. Actually, you were here 10 years ago, long before I showed up.
I didn't have as much gray hair then, James,
Yeah,
but yes, I was on
yeah,
10 years ago.
yeah. Well, it's as I said, in these pandemic times, so many businesses and individuals have been negatively impacted. I really often feel what I would be like if I were 34 years old or 40 years old. And but however, despite the fact that many businesses are not doing well and unemployment are still high, about 8%, some businesses seem to thrive. They seem to prosper. And it seems to me that mortgage is one of them. Am I correct? Can you just say something about why, if in case I happen to be right?
You're absolutely right, James. And this industry has really seen an influx of buyers and borrowers as a result of lower interest rates that are available right now. And there's just about there's not many folks out there that have interest rates low enough that they can't take advantage of whether it be a refinance or if they're thinking about purchasing, the opportunity to purchase and get a low interest rate is here now. So there's been no doubt our volume has been unprecedented over the last probably nine months. Through the pandemic. There have been some folks who haven't lost their job or able to work from home, and really it's just been unprecedented.
Did you expect it? Did you really, you and your colleagues, your company, did you expect this to happen?
No, definitely not. I mean, as we put together our projections for 2020 as in the first quarter, they were nowhere near where we ended up. Obviously, projecting a pandemic would be tough to do. But even as we got into the pandemic, and rates started to come down, we really did not. We didn't see it coming, and that's the way things happen sometimes. So what you're seeing is not only in very high volume, you're also seeing capacity issues with a lot of mortgage companies where they didn't see it coming. So therefore, there's no way to ramp up the human resources necessary to fulfill all of these orders. So you're seeing refinances and purchases. Well, primarily refinances taking longer than normal as a result of just having that level of volume with the same headcount trying to fulfill it.
Oh, I get it. Because the same experience happens to me in the area of construction. When I say construction, I mean just fixing a house, either the interior or the exterior of a house. I have noticed that it's very, very difficult nowadays to find contractors who would even answer your telephone call because they are so busy. Am I also right on that too, Ken?
Well, absolutely. If you think about the time where we were in quarantine, I mean, you're looking at your house and you're spending more time in your house, and you come to one of two conclusions: either A, if I'm able to, I'd like to fix it up, or B, maybe I'd like to sell it, in which in a lot of cases requires the help of contractors. So I think that's pandemic driven as well. I think that you're seeing a shortage of availability in the contracting world as a result of that. There's no doubt. And building supplies. I mean, building supplies are also an issue. Whether it be lumber or stone, you're just seeing an increasing demand for those products.
Yes, I've been waiting for months uh, to for a contractor who can come to our house and fix things. But let me get back to your business.
Mhm.
I know that it's very good to be pleasantly surprised. You have more business than you can deal with. But don't you think, in a way, this whole situation benefits mostly people who have access to capital or who are gainfully employed despite the pandemic, and also people who have savings, who have, you know, some money stashed aside, so they can buy houses. Is it true? In other words, it's it's kind of, in a way, expanding the inequality that we are seeing.
Well, there's no doubt that there are certain requirements to buying a home, and one of the most important is employment. So those who are not employed as a result of the pandemic, they are in a position where not only are they going to have a difficult time purchasing a home if that's what they wanted to do, but there's also going to be difficulty in refinancing their home. The CARES Act, which was passed earlier this year, was designed to kind of help folks with their mortgage payments, and we're seeing some unintended consequences there as well, where folks who took advantage of the CARES Act and maybe deferred their payments for a couple of months, they're having a difficult time re-entering the borrowing space because, they have to now make 3 monthly payments on time. Which could impact your ability to buy and borrow, whether it be a refinance. But at the end of the day, if the three areas of risk that we look at, credit being one, income and qualifying income from employment being another, or other areas of qualifying income, and of course assets. Those products are all the same. They're as they were pre-pandemic. There are absolutely first-time buyer products out there for folks who want to get into a house with very little money down. That product exists. But what's different today than maybe 10 years ago is that homes now have equity. That for the first time in a long time. And that is opening up more opportunity for people who have been in their home for the last 10 years, who bought in and around the last meltdown. They now have equity where they can tap into it and fix up their home or sell it and have a sizable down payment for the next house, as opposed to pure savings, which would, just be their cash savings in their checking and savings accounts. And I think that that's an opportunity for people who have been, in their home for 10 years or so.
What would happen to people who are first-time buyers of houses, and it also so happens that they have just been laid off, and even if they can borrow money from their parents or find some way to get a chunk of money, do they run into problems getting a mortgage, getting a bank to support them? Yes or no?
Without a doubt. Yeah, without a doubt. I think that what we're seeing for those who were laid off, and keep in mind, it's not people who were just laid off. There are many small business owners whose businesses were impacted by the pandemic as well, and their ability to run their business. So what we're seeing is an abundance of caution from the lending side, where they want to make sure that the self-employed borrowers can show with year-to-date profit and loss statements and tax returns that the impact on the pandemic is not going to affect their ability to repay the loan. For W-2 borrowers, it really depends on the type of business or the type of job that they had pre-pandemic. If they were salaried employees and they were furloughed and they're back to their job and it's a salary, then they're going to have an easier time than folks who were hourly employees or variable employees or employees that maybe worked for tips and commissions. These folks are going to have the hardest time re-entering the borrowing world post-pandemic as a result of not being able to show what the true impact of the pandemic, what the true impact the pandemic had on their income.
Right. You happen to be the best person to answer this question from someone in Philadelphia by the name of Richard Gallo. The question is, do you have any tips on saving money on a home mortgage?
Well, that's a great question, and it can be answered one of two ways. If you already own your home, refinancing into a lower interest rate can do one of two things. It can either save you money monthly, or if you can refinance into a lower interest rate and a shorter term, your monthly payment may not go down. And in some cases, your monthly payment may actually go up slightly. But the term, if you can shorten that term, you could save yourself tens of thousands of dollars in interest over the life of the loan by going from, maybe a 25 years left on your loan and refinancing into a 15-year, which I have a lot of clients that are taking advantage of that. And then the second way you can save money on a home mortgage in the purchase side is preparation. That's the best answer I can give. Your credit score is going to have a huge impact on the type of products that are available and how much it's going to cost you to borrow. So by getting into a conversation with a mortgage professional as early as possible is a great way to save money, because you can kind of look around corners and spot areas where maybe you could improve your credit, which then in turns opens up new opportunities from products availability and possibly lower interest rates. So you don't want to wait until you walk through the house you love to get pre-approved for a mortgage. You want to get pre-approved as early on as possible because it's going to help you prepare for the transaction, and ultimately it will save you money.
Very good. Thank you very much, Ken. I think this is the time to tell people here's how you send in your questions to Money Matters TV. Welcome to Money Matters TV. My name is James Chan. I am very glad to introduce a delightful guest of ours. His name is Bruce Blackman. He is CEO of his company, Entrepreneur Capital Corporation. Bruce?
Hi, James. Thanks for having me.
Well, thank you. How have you been? But before you answer, how have you been? I think it's very important for you to tell people what is Entrepreneur Capital Corporation. I know that you probably are one of the best or most famous people in your field. So tell people, what do you do and why do you do what you have been doing?
Well, we're a national consulting firm, and our specialty is finance. We started 31 years ago, and it's kind of interesting how we got started with all this advice and counsel. I was vice president of a major funder of SBA loans, and after a couple months on the job, I realized, oh my goodness, it's cookie cutter. They either will qualify or they won't. And I got interested in everybody I turned down, much more interested in the guys I funded. So I called these people after 4 months and said, "Did you ever get your money?" And 40% said yes. I said, "Tell me how they did it." And I started writing things down. And pretty soon I had all these ideas, and I was giving lectures, and I decided to write a book. And this was my first book, called The Secret to Getting Money in Northern California, which is where we were living. And I had to figure out how to raise money for the book. So I sold advertising in my book. And it's kind of funny. The first time I sold advertising, I walked into one of my clients and said, "I'm going to sell advertising. A full page is $6,000. I made that up while I was talking to him. And he was in the book. I showed him about it. I did the book on my Apple II. That shows how old I am. But I said, "Look, I'll give you," his name was Charlie, "I'll give you a full page." He turned to his secretary and said, "Get me graphics." And the next thing I know, I figured, well, I can go to the next guy in charge. He was a top guy in receivable financing. And I said, "Look, we were selling advertising in the book. Charlie here, he's already got a full page." And this guy took a half a page. So that was the beginning of Guerrilla Financing, which is a way to finance things with very little money or using your expertise. Eventually, I came out with a second book with Jay Levinson called Guerrilla Financing. It hit the bestseller list, and I was all over the country talking. And I got on Entrepreneur Magazine, said, "Write a column, how to finance a book." So I did that for 3 years. Millions of people. It was a lot of fun. I got letters from all over the country. The funny ones, I get letters from guys in prison say, "Bruce, I got this great idea. How do I fund it?" I always got a kick out of that. And I actually had my own radio show, Business Radio Network, which doesn't exist anymore. It's a shame. People would call in and say, how do you raise capital? But my passion is anything new, how to raise capital. And of course, with the Great Recession, we've come up with all kinds of fintech, exciting ways to help young companies get the access to capital they really need.
Very good. And you have any question for Bruce?
Yeah. So Bruce, what are some of the major changes that you've seen in entrepreneurial financing over the last couple of years?
Well, it's a good question. In the Great Recession, around 2008, there was a huge change because banks were shut down. So something called a shadow bank, which is a non-bank, came into being. Now, what is that? That is a bank that gets its money from investors, whereas a normal bank will get its money from depositors. Now, that bank doesn't pay for that depositor. They do a little advertising to get, but that's basically free money to them. So their interest can be very competitive. A non-bank has to go to investors, a little bit more expensive, but they can do things that a bank can't. Banks are highly regulated. Non-banks so far are hardly regulated. So for terms of length of a loan and all kinds of ways to pay them back, they can be creative. So that industry has blossomed. Just to give you an idea of a loan that we really like to offer our clients, unsecured financing. Now, there was no such thing as unsecured financing years ago. You had to have security, especially a business, to borrow money. But unsecured financing came out with all kinds of things. No collateral, and that's really what it means. We can offer loans with no interest for up to 20 months. That was unheard of. And these loans are quick. You can get them in 3 weeks. You could be a pre-revenue company and walk out in 3 weeks with hundreds of thousands of dollars and get a unsecured loan. So that is creativity. All came out of fintech. Very, very exciting for entrepreneurs across the country.
Bruce, I have to interrupt you because it sounds too good to be true. Because I'm thinking about your company. I mean, if you make a loan and it's not secure, what gives you the confidence and the ability to sleep at night that your money is good?
Well, we deal with major institutions. We bring our clients to all kinds of different ways. And these are very strong companies that have figured out a way to help the entrepreneur. And the only thing is that the entrepreneur is a specialist in his industry, but he knows very little about corporate finance. Even if he hired a CFO, and it could spend over $100,000 to get a good CFO. That CFO has some interest and knowledge of financing companies, but that's his personal knowledge. A company like ours, a consulting firm who deals with hundreds of companies every year and thousands over the last 30 years, many, many thousand. Last time I counted, it was over 10,000. We're in the trenches. We know who's doing what, who's got the money, who doesn't have the money during the COVID crisis, what to do, how do you prepare yourself. So our type of company is what, and other companies and our competitors provide this type of expertise. It's hard to find, but entrepreneurs need that expertise. They need to know about finance, cash flow, and that aspect of the business.
Bruce, how has so you just mentioned, with the COVID and whatnot, and obviously, as I mentioned a few minutes ago, the small business owners that were impacted. How has that affected entrepreneurial financing? How has the pandemic affected, and what are some of the things that small businesses can do to prepare for financing as that starts to loosen up?
Well, it's hurt. It's hurt. The government's giving all this money. The Fed says, I'm giving all kinds of money into these banks. Well, what's happening? The banks are getting tighter and tighter, just the opposite of what they should be doing. So what does the entrepreneur? The entrepreneur's got to be very bold. He's got to be very creative. He has to look at different ways to raise capital. He's got to use what I created called Guerrilla Financing. He's got to think on his feet. And just for example, you want to start a business and you're importing from your importer. Okay, go to your importer and say, look, I want you to go into business with me. I'm going to make a lot of money for you. You got to give me certain terms so I can sell this and give you time to pay. So, in my book, I had 101 ways to do things without money and create money. I had a publisher, and this is what you should think of. I'm just giving you these ideas. I had a publisher came to me and she said, "Oh, Bruce, I get calls all the day. People publish my book and it's a hassle. And I publish many books." I said, "Your business is all these people calling you. Publish everybody who wants to be published." She charged $5,000 at that time and produce like, I don't know, maybe 100 or 1,000 books. Every author was happy. That was her real business. All the people who wanted to be published. So you have to think out of the box, and you have to think in a different way. I had a woman come to me. She wants to open a travel agency. Well, she didn't have any money, but she was very experienced. Now, this is an old deal. This is when travel agents were, this was years ago, but it's a great story. Travel agents, there was a big demand for them, and that industry is gone now. But so I said, look, let's figure out how to do it without any monies. We went to all these government agencies looking for places to place all their people. And we said to them, look, we have a travel agency school, and we can pretty well guarantee that we're going to get them jobs. We want you to guarantee a loan, and we'll get the financing, but will you guarantee the loan? They thought it was a good idea and said, we'll guarantee it, but we can't give you the money, but we'll put in a guarantee. And so we went to a major bank and said, look, we've got a guarantee from this agency. We're all set up to train travel agents. Will you give us a loan? They said, well, and I said, look, here's what we're going to do. We're charging $10,000 for a 3-month course in how to be a travel agent. We're going to give you back $2,000 of the $10,000 that you gave my client, and that's going to sit in your bank for 3 months. Is that a good enough incentive as a reserve? And they said, yes. Next thing you know, we finance our customers. Our customers finance the business. So that's how to be creative. I mean, there's a lot of ways to do that, and you just got to be creative.
What is your craziest client example?
Well, I think the craziest example of, I think the travel agency was one, but I'll never forget the guy who came to me. He said, I just moved into the Bay Area because I was in San Francisco Bay Area, and I repair air condition. And I don't know, how do I get some money? I said, look, air condition, every business needs someone to repair the air condition. When that happens, that's an emergency. I want you to create an agreement that says you call me 24/7 and I guarantee I will be there within a half an hour. And we created this contract, and we basically pre-sold that contract. He had enough money to start his business. So it's just creativity, guys. It's just thinking out of the box, and you can always do it. Just think about different ways to do that.
What's Ken? I'm going to ask him one question, and then I hope you have another, because I think that we may not have a long time left. But Bruce, I just want to know what's the size of a loan that is kind of on the small side, not on the big side. I'm sure that you must have done very big loans, but just give a number.
Well, a minimum loan for our firm is $25,000. Now, people will come to me and say, Bruce, all I need is $5,000. All I need is $10,000. And I'll say, look, you're going to need more money. If I can get you 25, and a lot of these loans are revolving lines, so they don't pay interest until they use it. Take as much as you can. I always can't believe people say, in fact, I will get a loan commitment for companies, and they'll take half of it. And so once they only take that, that's it. And because, it'll cost me more money. You need money. Take as much as you can get, put it in a reserve, put it in a savings account. I don't care. Take as much as you can. And of course, our largest thing, we're working on hundreds of millions of dollars on a big project. That's something else. But entrepreneurs always take what you're offered. And 25, even if you're looking for 5, we get you 25. Take it.
What's the largest financing? that you've
Right, yeah.
Yeah,
secured?
well, right now we're working on a $700 million deal, big real estate project in Vegas. Very close to closing, but the the resurgence of COVID has had some big funds like that say, well, I don't know, but I think it'll all work out in the end. It's pretty exciting. That would be our biggest deal. But I got to tell you one story that's happened right at the beginning of the Great Recession. We arranged a $75 million loan to a public company, and everything was committed. And the president knew, well, this is an equity line, by the way. So they were putting people on the board. The president was a little afraid of people on the board. He said no. His CFO left immediately, like, I'm not going to work for this guy. And in 6 months later, they fired the guy. And it turned out that he wasn't really running the company the way he should. And those bankers who would be on the board would eventually find out. But just a kind of a weird situation. And it was right at the beginning. That company could have used that money, solved the problem. That was like the worst mistake I've ever seen in not accepting capital.
Yeah. Well, Bruce, we have about 3 minutes left, and I need to talk about our, coming guest. So if there is one thing you want to talk about, let's say in a minute and a half, what would you like to tell the viewers about you and what you can do for them?
Well, I say, first of all, be bold. Try different things. Try things you've never tried before. Our ears are always out for the latest technology. And our company, Entrepreneur Capital Corporation, Entrepreneur Capital Corp is our website, but we'll come up with some ideas. I had a call yesterday, and they said, Bruce, we got a, and I'm in California, my office in San Diego, and they said, we have a solution to the fires in these homes. I can't tell you the solution. I said, that is a great idea. So something like that, you find out what's really going on. They have a great solution for people whose homes are destroyed. And I think that's going to be a great business. So be bold. Take advantage of what's going on right at this minute. Now, everybody can't sell a mask. They tried to, in fact, someone developed a special mask. I thought it was great, but everybody's doing it. But just try something different. And even if your business is shut down, by the way, we can still loan you money. So we can be very creative. How's that?
That's good to know.
Yeah, thanks. Ken, you have one question for Bruce, or before I introduce the next guest? Or talk about the next guest?
So Bruce, you have 2 books?
Yeah, but Guerrilla Financing was the one that was published in a couple languages and taught in schools and hit the bestseller list. The first one, Secret to Getting Money, was just to get me started. I like to write. I write a blog for the Wharton magazine, my alma mater, and things like that. But it's out of print. That's the problem, guys. It's out of print. You can maybe get some old copies on Amazon, but today it would be out of date. It would be out of date. You've got to be up to date on what's going on in the trenches.
That's
so
right. Yeah.
Appreciate that.
Fantastic.
Yeah. Thank you, Ken, and thank you, Bruce. Our next guest will be Desiree Cockcroft of Destination Life. I hope to see you soon. Thank you for viewing Money Matters TV.